This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Meyers, and today we are going to do a solo episode talking about investing passively in self-storage and the reasons why. You know, during the pandemic, we've seen a whole lot of folks that have unfortunately lost their jobs. They have money that used to be in retirement accounts with their employer, now moved over to 401ks, and they have the ability to self-direct those. Maybe that is you. Well, we focus a lot on syndications and in teaching people how to invest in self-storage passively, and also teaching self-storage investors how they can attract folks that have money that want to invest passively. So today, what I would like to do is to focus on the reasons why perhaps you and others look to invest passively in a syndicated self-storage project, like a development, like an acquisition, or many of the projects that we invest in and bring along our investment partners with us. And one of the things that we hear many, many times is that people just don't really have the time to be active investors. They look at the tenants, the toilets, and the trash that's involved in investing in real estate and all the heavy lifting and what it takes to really build a team. It's taken us 15 years to develop the team that we have, and that is a group of self-storage rock stars that, again, are the best in what they do in each and every area. And we've been through a lot. We've tested a lot of vendors. We've tested a lot of staff members. And we've gone through this maturation process where we now are dialed in. And we have a very well-oiled machine, no pun and no cliche intended. We have a well-oiled machine of being able to move projects through the process of finding, evaluating, purchasing, and managing self-storage facilities. And then also layering alongside the various partnerships, and as we call it in the capital stack, where we have mezzanine lending and other ways to be able to get to the closing and get to the finish line by layering in additional forms of capital. And a big piece of that outside of our primary lenders is by bringing in private equity partners, investors that want to invest in with us passively, that don't want to go out and do this. And so for those of you and those that are out there looking to get into self-storage and commercial real estate, there's a lot of heavy lifting that it takes to build a team. And for folks that don't want to wait around and they don't want to, make a mistake along the way by having the market show them that mistake and teach them. There's two ways of getting an education in investing in real estate, and perhaps doing it the wrong way, and that is by looking at others' mistakes or by making those mistakes yourself in the market. And so by investing with somebody who has already made those mistakes, who has gone through the learning curve and has a well-oiled machine, those are the what is attractive. That is what is attractive to many folks out there that are looking to invest with us, and that the team has already been built, and the learning curve and all the mistakes that go along with it have already been vetted and handled. Another reason is that so many people come to us and they have aspirations of becoming a self-storage investor and doing this actively, but when they find out, again, the time that it takes and building a team, well, they don't want to wait with their cash on the sideline or to begin their career another 6, 9, 12 months before they are able to build that team and then go out and find a facility in their market. And many times they find, as they look around, and maybe they're not looking in the right places and not looking and having access to the kinds of projects and the properties that we do, that they just don't have investments that they can find in their own market, or be able to watch the market on a regular basis, or be able to build those relationships with brokers that are going to send deals their way as soon as they become available, or to do all the heavy lifting and the mailers and the marketing to the owners themselves to actually acquire a facility. They may only have time to look at what is already listed, which usually, as many of us know, it's too late, and many times they're overpriced. And so by working with a syndicator and a promoter and a company like ours or others, we have access. We built those relationships with the brokers because we have the ability to transact, and we have a proven track record that they know if they bring us a project that meets our criteria, then we have the ability to close that and to be able to transact, and they get paid their commission. Also, if we have a marketing machine that is constantly looking at properties that come available, on the market from various websites, and we have our virtual assistant scouring those websites. We know and we get those notices when a facility is being made available before anybody else does, because many times it doesn't make it to the public eye. And then also the relationships we have with our joint venture partners, the countless students, the tens of thousands of students we've taught over 15 years on how to go out and find and purchase self-storage facilities. Well, they bring deals to us as well. So we have the ability to have multiple sources, multiple funnels coming into our organization, deals, opportunities to be able to look at that most individuals don't have access to. And so we get to pick the cream of the crop, which then produces the highest returns and allows us to bring in our equity partners. Another reason why people come to us to invest in self-storage or commercial real estate is a hedge, is a diversification. I don't think there's any investor out there isn't any investment guru or people teaching about investing that don't say you don't need to put all your eggs in one basket, and that you should diversify different types of stocks or mutual funds, perhaps bonds, looking into real estate, other alternative investments, gold, what have you, collectors, wine, collector cars. There's many ways, Bitcoin, cryptocurrency, many ways to invest for today and also for the future. And so I certainly am one as well that I don't feel it is wise to put all of your eggs in one basket. And so many folks come to us to look to diversify. And in this case, in this instance, in the time that we find ourselves in right now, there are many folks that have pulled out of the stock market because it's going up and down like a pinball machine. It is paper after all. It is the big casino on Wall Street. It doesn't always just go up, up, and up. And many folks, and maybe some of those folks on the call right now, maybe some of you have lost money in the stock market or in a particular stock or a mutual fund. And in some cases, like mine, I lost it all, basically. When I was working for a Fortune 500 company, they were cooking the books back in 1999. And when the tech bubble burst, this company went down, and I lost $350,000 from my retirement account. So at the end of the day, it's just paper. And many people like myself are realizing, they've read the Robert Kiyosaki's of the world and others who say you need to invest in assets that produce income, a hard asset that produces rental income. And so for that reason, real estate, investing in real estate, and particularly self-storage, is one that is very attractive. We like real estate for all the reasons that people invest in real estate, and that is that, first of all, we can borrow money to buy it. You can't do that with stocks, bonds, or mutual funds. We can put a tenant into our rental real estate. They pay down our basis or they pay it off, and all the while we can improve it, make it appreciate. We can force the appreciation and the value in it all the time, all the same, while at the same time we can also depreciate the facility, our real estate. So for all those reasons and many more, it makes sense to not only diversify, but to diversify into real estate as another hedge against Wall Street if all of your eggs are in that basket. Also, liability. There's many folks that are very risk averse, and they don't want this liability. They do have a high net worth, and if they were to invest in real estate, they take on that liability of tenants, and they could be sued by a number of folks that they do business with, their vendors, tenants, partners, employees, contractors, and they just don't want that headache, or they have a lot more to lose, and so they would rather invest with somebody else passively and just buy shares of a project and not take on all that liability. Conversely, there are folks that don't have a lot of cash to be able to invest in a project all on their own, and so they would rather either put a large chunk or a small chunk into a project, again, further diversifying, maybe putting $50,000 here or $100,000 there, even if they have the ability to put $500,000 in. If they did, they would not take on that liability, but they also have the ability to take down large deals without taking on that liability. There's also many folks that don't have a lot of cash to be able to go buy their own. They've got $50,000 or $100,000, but to buy $1 million property on their own, they would have to take on the debt. They would have to come up with $250,000 to get involved in a facility that meets their investment criteria. And for some folks, that's just not attainable. And so a way of putting $50,000 to work or less is to invest in shares of, or a percentage of, or a piece of, having an equity piece in a larger facility and still enjoying those same returns that they would receive on that amount of money. They're just deploying less capital to achieve those same returns. And they also get the same benefits, the same tax benefits as if they own the whole thing. We distribute K1s because the folks that invest with us, they are our equity partners. They own shares of the LLC that owns the property. And so therefore, they get all the depreciation, they get the tax savings that rolls down to their personal, depending upon how they've invested with us. And so when we do a cost segregation analysis and we accelerate that depreciation, like we do and that we can do on self-storage, all of that rolls into and flows through our capital partners that come along with us. They get the same benefit as well. So it's a way of being able to offset income that is coming in on your tax returns by taking advantage of the depreciation and the accelerated depreciation that we have in self-storage. And then, of course, leverage, all of the above. By working with the syndicator, they're taking on the risk. They're guaranteeing the loan. They're taking on the management by self-managing or overseeing the property management company. They've already put in their 10,000 hours, or at least you should be looking at syndicators that have put in their 10,000 hours, as in Malcolm Gladwell's book puts it. The folks that actually are experts in their industry, they put in the time and they built a team. They have access to multiple properties in their funnel so that they can peck the cream of the crop. And you do not have to take on the liability because they are taking it on in this project and making sure that they are well heeled and also well insured to be able to handle this. They control the cash typically through a portal that allows you to see transparently, where the money is flowing in and out of this project and what they have done in their other projects, so that you can feel comfortable in leveraging the experience that these folks have in the past purchased a self-storage facility or developed it, created value, and then exited and produced those returns to their investors. And then again, all the tax benefits that we had mentioned, that is the reason why so many folks are looking at investing passively in a syndication and working with promoters and syndicators. One other one that we look at, we do have two businesses. We teach people how to invest in self-storage, but that all started because we're darn good at investing in self-storage facilities. And the key to our growth was once we tapped into all of our capital to deploy, we still had projects coming in because of our marketing efforts. That's when we began to learn all about private equity and how to properly syndicate and put together these private placements through the SEC and make these available to folks as well. And so as a result of that, we teach people how to invest in self-storage, but many of those folks, they don't, for whatever reason, have the ability or the time to invest actively, and they decided, gosh, I can get roughly the same returns, not have to do all the work, and I can deploy less capital. I'm going to invest passively in a project, and our students will come along and invest with us. Now, the benefit of that is, in addition to everything that we just mentioned here, is that you become an owner. So when it comes time for you to invest in your own self-storage facility or commercial real estate, that when you then are talking to the brokers, you can hold your head up high and say, I already own self-storage, when they ask you if you have experience and whether they're, so that they're trying to see whether they should take you seriously and accepting an offer on a facility that they may have listed. And then when it comes time to talk to the bankers and your private equity partners, you can hold your head up high and put your shoulders back and say, yes, I am an owner of self-storage. I have an ownership percentage in this property and these properties. And you can talk intelligently about the not only the industry, but about the projects that you have been involved in, because you are in it. You are an owner, and many times that is the springboard. That is the springboard that people need and can use to then take their investing career to the next level when they embark upon their first project and they begin to grow and scale their business. So again, another benefit in investing passively and starting there. So for all things to learn about how to go out and raise private equity, go to selfstorageinvesting.com. And if you want to just reverse engineer and model what we're doing and or look at the projects that we've done and the projects that we're investing in right now, go to passivestorageinvesting.com. You can download our free How to Avoid the Mistakes that many beginning self-storage syndicators make, and then poke around, take a look at how we list our properties, what our offerings look like, how we've structured them, subscribe, to begin to take a look at the emails to see how we have generated a community of folks that are interested in and continue to invest with us over and over and over again. So with that, gang, it has been my honor and pleasure to once again come to you and share with you one of the perhaps even hidden secrets or the untapped potential in growing and scaling your own business, which is how to syndicate, and also for those of you looking to get into self-storage passively, to get a better understanding of what that looks like. So this, I believe, is going to be one in a series of podcast that I'm going to do to show you the reasons why you may want to invest in a syndication or in a passive capacity in a self-storage facility as we delve down into some of these reasons and more. So stay tuned. Give us a like and come over and check us out over at passivestorageinvesting.com. All right, take care. We'll see you next time. Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.